Hello and welcome back. My name is Brandon Watson. Today in this video, we're going to be taking a look at PLTR's charts to see if we can guess at what the future might hold. Now, much like those who study fundamentals to see where a company might head to in the future, we're going to study past price movement to see if we might be able to land at the same conclusion. So as always, we're going to start first with volume, as there is no other indicator on a chart that is more important, which, when you combine it with price action, starts to reveal a nice little story. So saying that, since PLTR is fairly young, we'll go back to the beginning, which you'll notice that it didn't take long for PLTR to catch attention and start to trend up 276% from its fresh lows just 2 months prior, going from 8.9 to 33.5. As price starts to trend inside the lower third of the channel, volume starts to build up and test that lower third resistance, each time with more and more volume that ultimately fails and drops back to the channel support before re-attempting a breakout again. Even every red candle had increased volume in order to sustain the price within its current trend at the time. Finally, after the fourth attempt at breaking the lower third portion of the channel, price finally gains enough volume that would not only break past the resistance, but start to extend into the upper portion of the channel with more than 2 times the volume than the original attempts before it. Then, of course, the initial hype dies out, price starts to get rejected by the new resistance that was created by the overextension, and now we get a round of consolidation that lasts for another 2 months. Eventually, news comes out from Palantir that they are going to demonstrate for the first time ever the latest developments to its software program. Buy the rumor, sell the news is something I'm sure a lot of people forget about, because just 4 days later, after the 74% push to all-time highs at $45, things start to look a little shaky. Why? Well, literally for the same reason as the others in my past videos. YouTube hype. New retailers climbing into something they know nothing of while trying to capture profits for the long term, when in reality, just like NNDM, they were merely the fuel for the rocket who were already on board below $20. These new people look at their Robinhood charts and think, let me throw in my life savings at $45 because I'm going to hold this for 10 years. Then, of course, big firms come in and yank a large portion of their shares, sending the share price down so that they not only take profits on the easy hype move everyone just gave them, but also to re-scoop up cheaper shares so that they can play the game all over again. This, of course, doesn't happen until they're done playing with the emotions of the uninitiated. So moving right along, where are we at today? Well, immediately a few things jump out at me. 1, the channel that the price is in that could signal another round of consolidation. 2, slightly above average volume compared to the first round of consolidation. 3, the RSI is starting to curl up. And 4, the TTM squeeze left some downward pressure that got picked up before making lower lows compared to the major shakeout that occurred at the end of the downtrend. How can you tell that it's the end of the downtrend? Because usually when reversals happen, there tends to be a major shakeout, which then creates a wick at the top or bottom of the candle, which also brings in increased volume as people either start to ditch their shares, or as firms start to load the boat at a key level of support before the crowd catches wind of what is happening. Now, what does all that mean? We want large investors with real money to build up a position. We absolutely do not want a rush of shares to be bought up, as that will send the price halfway up to the moon, only for it to reverse right back to where it came from. Except, this isn't SpaceX, and we don't have reusable rockets to land safely. If you want price to sustain itself past all-time highs, then positions have to be built up, as that is literally the only thing that will hold price up at higher levels. With no long-term positions built, all you have are emotional traders who will pile in again, only for the rug to be pulled and their fear to take hold again. Then we have the slightly above average volume here that helps as a possible indication that this current sideways channel will hold. That means more shares are being traded at the same levels that price was at before. The RSI and TTM squeeze are starting to curl up here as well, as price starts to test the midpoint of the channel, which, if we see increased buying pressure, we should see $27 fairly soon. But don't get too excited, as A, indicators are crap, and B, price might and probably will get rejected at least one more time before trending out of its consolidation. So if you buy now thinking price is going to shoot through the roof, you might be right, and you might be wrong. Be careful at each level of resistance, and remember that we're only 1 month into consolidation, where last time it took 2 months. Don't pull a me and jump the gun early like I did with NNDM. Take your time and form your own opinions. Saying that, what are my price targets for this stock? Again, assuming these levels of support can hold, I'm thinking PLTR can see not only $45 a share again, but at least $50, if not $55. Why those numbers? Well, $45 is all-time high, and I'm almost certain that with time, price will try to take out that all-time high. Now, assuming we do get that high, why would anyone want to stop at $45 when psychologically $50 is in reach? And if that were to occur, I'm almost certain that hype will push it over $50 just to get more new retailers excited for an absurd $100 price target before price comes back and retests the $45 mark as a support, thus repeating the cycle again. Now, if price were to ever reach $100 in the future, I promise you it won't do it by the next rally. There will be another push, followed by a rejection, followed by a retest of support, and then finally with consolidation before the next leg up. Stop getting fooled into thinking the moon is the destination. Everything takes time and needs to be planned accordingly. Do not rush in on hype, and if you see hype occur, play it smart or wait for the inevitable crash back to its breakout. It's usually just not the smartest move, but also the safest. So if you all have any questions, go ahead and drop a comment below. I'd love to hear your feedback, and I hope you all take care and have a great weekend.